Hey guys, Joel Frank here, market analyst for YouTrading. And in today's video, we're going to be taking a quick look across markets, talking about some of the themes that are currently in play, and talking about some of the risk events that are coming up this week that could have an impact on the price action. So let's jump straight into the charts here. This is the S&P 500 or a CFD tracking the front month futures price of the S&P 500, and you can see that the index, like the major US benchmark, basically. Um, Around 4,200. Slightly risk on start to the week, to be honest. We're up about 0.4% after a little drop last Friday, holding pretty much bang on highs for the year. The same story with the Nasdaq, pretty much at highs for the year. Looks like it's wanting to push higher. So, we've got a good risk tone in markets at the moment. That's also reflected in US government bond markets. You can see the 2-year yield pushing back above 4.3%, pushing above recent ranges, still way down from below from the levels we were at before the sort of bank crisis among the regional lenders in the US began early in March. But we're still pushing higher. Exactly the same with the 10-year pushing to 3.7%. And then if you just take a look at the Dixie, the higher yields, I mean, we've pulled back a little bit off recent highs, and in a risk-on market, that's not necessarily good for the dollar, which is seen as a safe haven currency. But yields moving higher, which has been helping lift the dollar off lows. Gold being weighed by the higher yields and the stronger dollar, but still not too far from recent highs. I mean, we're still at 1,970, not too far below 2,000, and yeah, not too far below those all-time highs. And then if we just have a quick look at oil as well, hovering within recent ranges, still way down from that and those post surprise OPEC output cut highs that we saw around $83 per barrel, currently around $71.50. And then just a quick look at Bitcoin, hovering still pretty good levels, not too far from yearly highs, but just consolidating around 27,000 above the yearly highs in the 31,000 area, but holding above the 100-day moving average nicely for now. But as you can see, well, actually, SP 500, as you can see, it's risk friendly but fairly quiet start to the week. The major themes that we've got going on at the moment in markets are number one, the ongoing debt ceiling talks in the US, which, there's a lot of grandstanding, a lot of posturing, as there always is. I think the market's base case here, you can see from the positive price action that there's going to be a deal and a catastrophic default is going to be avoided. So that's the market's base case at the moment, because how many times have we been here with the debt ceiling, coming up in the last minute and then a deal is done to avoid a catastrophe? Like that always seems to be the way it goes. That seems to be the way markets are viewing it. Then the other two major themes we got in the market this week is the Fed and US data. So let's just take a look at the calendar quickly. Don't have it on the calendar today, but we do have a bunch of Fed speakers coming out. And there's actually there's an interesting divide amongst some of these Fed speakers. Like I think we had Bullard talking about maybe another 2 interest rate hikes this year. We had Kashkari talking about how he wasn't sure. We've had other Fed speakers, Fed policymakers speaking about how they're unsure about whether they want more rate hikes or not this year. But most importantly, Fed Chair Powell speaking last Friday, and his message was interpreted very much as we're now going to pause and just be patient and see how things play out with the option of more rate hikes. So that's kind of where we are with the Fed. We've got the Fed meeting minutes out on Wednesday. And obviously, like I said, we're going to be monitoring Fed speak. We've got a bunch of speakers today and a smattering of other speakers throughout the week. Regarding US data, we've got the flash manufacturing and services PMI data for May that's out tomorrow. Some housing data, Richmond Manufacturing Index. On Friday, we then got the Core PCE price index data, which is the Fed's favored gauge of inflation, plus some durable goods orders and the final version of the University of Michigan Consumer Sentiment Report. But this Core PCE price index data will be the most important because the main reason why the Fed is thinking about keeping interest rates above 5% all year against the market pricing, which is for rate cuts, is because they're worried about sticky inflation. Well, that's partially what they're worried about. They're also worried about the very strong labor market, which makes inflation even stickier. But yeah, we're going to be looking at the inflation data in that context, basically. And, if we saw a downside surprise here, that would be very good for risk assets. Like you'd see stocks going up, crypto going up. You'd also see bond yields falling. You'd see the dollar falling. So that's what we're going to be looking out for there. Obviously, unemployment claims on Thursday is always important as it remains at pretty robust levels. Not quite as strong as it was, but 250K, that's still consistent with a decent labor market. And then the second estimate of US GDP data for Q1. That'll be worth monitoring as well, of course. But then outside of the US, there's some interesting stuff like the Eurozone flash PMIs, which are out tomorrow, UK flash PMIs, which are out tomorrow. RBNZ looks like they're going to hike interest rates by another 25 basis points to 5.5%, which I believe would be the highest amongst G10 interest rates, with the Fed in second place. With interest rates just above 5%, these guys will be going to the highest. Then you got some Bank of England Governor Andrew Bailey speaking on Wednesday, UK CPI as well, UK retail sales on Friday. Did I miss it? Was the UK jobs data as well? No, UK jobs data was last week. Um, but yeah, if you're a G10 trader, plenty of things to be keeping an eye on as well, particularly for the pound and the Kiwi. But yeah, guys, hope you all found this video informative, and I will see you all in the next one.